Hi everyone. Now I am continuing with the risk. So risk is always an inherent nature of investment. So all investment involves some degree of risk. Normally in finance, risk refers to the degree of uncertainty and or a potential financial loss inherent in an investment decision. In general, an investment risk rise, investors seek higher returns to compensate themselves for taking such a risk. But in the other case, risk is the probability that actual result will differ from expected result. So according to capital asset pricing model, risk is defined as the volatility of returns or changes in income. So risk implies future uncertainty about deviation from expected earnings or unexpected outcome. Risk measures the uncertainty that an investor will willing to realize a gain from an investment. So overall, while looking about risk, risk is an uncertainty or a loss of value or else any type of difficulties which are going to be faced by an investor while doing the investment is called as what is the risk. So according to that is called as what capital asset pricing model. Normally that is called any changes or volatility of income or return is called as what a risk. But in case of bank's point of view, that risk is different from mutual funds. Mutual funds point of view, risk is different from stock market. So risk is normally it is called as what an uncertainty. That uncertainty related to the volatility or changes in the income that are called as what a risk. So risk, different reasons of risks are there. One of the major risks that is called wrong method of investment because of lack of investment analysis. Then time is also very, very important. That is called wrong timings of investment. When we are looking about right time, when especially the stock market, when prices are falling, that time you have to invest. When prices are, that is called, when the prices are going to be increased, that time you have to do the investment. Or wrong quantity of investment. So sometimes we may select 10 or 15 or sometimes 100 or 200. That may go to influence the risk. Then interest rate risk, sometimes there is a fluctuations in the rate of interest in the banks or post office, that is also called interest rate risk. Nature of investment instrument, because of some of the instrument may give, especially share or debenture, or else that is called options or commodities. That type of investment maybe have some type of risk. That type of risk is also one of the reasons. The nature of industry in which the company is operating. Some of the industry is performing very high level, some of the industry is performing very low level. If you are selecting any type of investment or any type of company in that industry which is performing very low level, sometimes there is a chance of loss of income. Then terms of lending, for example, 10-year or 15-year, that may cause affecting for the risk in case of banks and other point of view. The national and international factors like war, political issue, legal issue, or else that is called company issues, or else through by way of employees issue, that are lot of problems associated with the reasons. And then natural calamities and other. So these are the major. So the major risk can be analyzed on the basis of wrong method of investment, wrong timings of investment, wrong quantity of investment, interest rate risk, nature of investment instrument, the nature of industry in which the company is operating, terms of lending, national and international factors, and natural calamities. So normally risk can be classified into two. One is that systematic risk and unsystematic risk. Let's move on systematic risk. A systematic risk is the part of the total risk that is caused by factors beyond the control of a specific company or an individual person. Or it is also called as the market risk. Systematic risk is also called as a market risk or undiversifiable risk. Is a risk that affects the entire economy or a market rather than a specific company or industry. Or it is also called the factors that are external to the company or organization. Or it is also called an investment of securities are subjected to systematic risk, and therefore it is called non-diversifiable risk. So risk have different reasons. Risk have different reasons, but a particular company may be beyond the control of that type of factors, that is called a systematic risk, that are non-diversifiable, that is not able to transfer to any other. That's why it is called a non-diversifiable risk. And again, sometimes it may continue with a longer period, an investor may have different problems. That's why different examples are there for systematic risk. What is called a natural disaster, weather events, inflation, changes of interest rate or market problems or else a technological issue. That are the different reasons behind in the systematic risk. So that systematic risk, that are totally affecting the market. Or it is also a volatility risk or a market risk which affect overall market, not just for a particular stock or industry. So that's why systematic risk have a very, very important role which reflect in the particular type of investment. Let us see about different types of systematic risk. One is that first one, the topmost one is called a market risk. The market risk arises due to poor economic conditions or a bad investor sentiment and unfavorable global events. That it may impact overall performance of asset like stock as well as cryptocurrencies or else even options as well as derivatives. So market risk which reflect the entire position, entire market which beyond the control. That's why it is called, the major impact is called market risk. And second one, that is called interest rate risk. So interest rate risk is the risk that arises from changes in the interest rate. This systematic risk affect the value of fixed income securities such as bonds. When interest rate rise, the value of bonds falls and vice versa. So any rate of interest which affects in the debenture or bond, that type of risk is called interest rate risk. Then another third one, that is called purchasing power risk, especially during the period of inflation, that will going to affect the general purchasing power or general price level of goods and services. That it influenced because of a greater impact on fixed income securities as the purchasing power of the interest payment and principal are declined with the inflations. Next, fourth one, that is called currency risk. It arises from changes in exchange rate. This type of risk affect companies with international operation and can impact their revenue as well as earnings. Next one, that is political risk. Political risk arises from changes in government policies, regulations or stability. This type of risk affect investment in countries experienced with political instability or uncertainty. Next one, that is called a commodity risk. Commodity risk arises from changes in the price of a commodity such as oil, gold, agricultural products. This type of risk affect companies producing, transporting as well as distributing of commodities. So normally the systematic risk which involves everywhere, that is called as what, uncontrollable. So any type of market or any type of company or any type of industry which anything beyond the control of their performance is called systematic risk. Okay, thank you.